Your brain does this thing when the renewal letter shows up. It goes, okay, the rates went up, payments are higher, and this is just what's happening right now. Everyone's in the same boat. Then you sign. I'm going to stop you right there. And no, it's not because you're wrong. In fact, you're right. The rates have gone up. But that letter sitting on your counter is not the final word. And the number on it is almost certainly not the best number available to you. I've watched too many Ontario homeowners sign that letter in a matter of days. And I've watched the ones who didn't, who asked one more question, made one more phone call, and they've walked away saving thousands of dollars from a conversation that likely took 15 minutes. This video is that conversation. I'm Varsha Pasel, and yes, I am a real estate agent. I am not a mortgage broker. So in this video, I'm going to walk you through what I think a realtor's point of view with helping clients, especially with 1.2 million Canadians making this decision right now. I'm going to walk you through with the realtor point of view, because this renewal conversation is something that is coming up time and again, but I want you to understand that the rate is only one part of the decision that you're going to have to make. Hopefully, I can offer you the full picture. Let's talk about how we got here in the first place. In 2020 and 2021, the Bank of Canada dropped rates to emergency lows. Most people who bought or renewed during that window locked in somewhere between 1.6 and 2.2%. I know it felt too good, and honestly, it was. Because rates don't stay at emergency low levels forever. The banks then raised them, okay? They raised them hard to 2022 and 2023, and right now in 2026, it's holding at 2.25%, and that's the overnight rate. And they haven't moved in several decisions consecutively. Now, the Bank of Canada rate and your bank's renewal offer are two separate, different things. Your bank builds their margin, their risk, their spread. So 2.25 overnight becomes 4.3, 4.4 on a 5-year fixed from a major lender. And that gap is how banks make money on renewals. And the thing I've noticed, and this is my read after watching this play out with clients, is that people don't question the letter that comes from the bank. So I want to offer you 3 things that almost never come up in a standard renewal call, but any of these could meaningfully change your outcome. The first one, that bank offer that your bank just sent you is not the best rate on the market. And I know that sounds fairly obvious when I say it out loud, but the renewal letter only feels official, okay? It's got your name, it's got your address, it has your specific rate, and most people, seeing that it's from a major lender, big bank, they don't push back. Banks send their standard offer. They count on the hassle that it's going to take you to switch. Okay, they count on most people signing it back, because doing the opposite is going against the grain and it's going to take more effort. And most people do not want more hassle. They want more simplicity. And so you think that it feels really large to go and shop around, but I'm going to encourage you to shop. Okay, a mortgage broker can take that same letter to multiple lenders in a couple of hours. And right now, the best available 5-year fixed on the market is around 3.99%. Your big bank's offer is probably sitting in the 4.3 to 4.4%. And on a $550,000 mortgage over 5 years, that's anywhere from $8,000 to $12,000. Isn't that worth a phone call? Second, extending your amortization period. Okay, if your payment is jumping $600, $700 a month and you're stretched, extending it from 25 to 30 years overall, yes, is going to meaningfully bring that number down. I can understand the appeal. Trust me, I get it. But those extra 5 years in payments are going to cost you as well, in tens of thousands of dollars over interest over the life of the mortgage. And if you're in a temporary squeeze right now with income, that makes sense for you. There's a genuine need for breathing room right now, then this 25 to 30 year amortization could make sense for you. I'm just asking that you go in knowing the real number, because sometimes what looks like relief is in fact a deferral. Next, the 3-year or 5-year decision, okay? Right now, the best 5-year fixed available on the market is sitting at 3.99%. A 3-year fixed is sitting at 3.94. I know, it's barely different on the surface, but a 3-year term gets you back at the table in 2029, when the rate environment could look different. Okay, you're not locked in until 2031. And then there's the variable rate sitting around 3.30% right now, about 0.7 below the fixed. So if the Bank of Canada holds or eases, the variable rate naturally saves you money. But if the rates climb, the fixed will protect you. So the question really becomes which risk fits your household and your risk tolerance for uncertainty. None of what I've just told you is going to come up in a standard renewal call. They'll give you the rate, ask if you want to lock in, and then they'll move on. But that's not good enough. That's why you're here. Look, if you're in the middle of this right now and these decisions feel like a lot to untangle alone, well, they are. Your renewal, your housing, your broader financial picture, they interact, right? They're all together, and sometimes it's hard to see clearly because you're making so many decisions and you're living in the middle of it. This is exactly the kind of thing I walk clients through. There's a link in my description to book a clarity call. I encourage you to do so. Let's do some math for a quick second because real numbers bring it all together. You bought in 2021 and your home was $750,000. Okay, you put 20% down, a mortgage of $600,000 at 1.8%, 25-year amortization. Your monthly payment is roughly $2,500. If you're renewing today, your bank's offer at 4.34%. Your new payment is roughly $3,250 a month. That's $760 more every single month. Over a year, you weren't planning on over $9,000 in mortgage and mortgage payments. Now, if you shop around and say you land on 3.99, okay, closer to just over $3,000 a month, yes, you're saving $95. It doesn't seem like a large trade-off between the bank's offer and say you going with a mortgage broker and a different lender. But that's over $5,000 that's coming back to you, or rather not going out in your monthly mortgage payment. And roughly 20% of people that are renewing this year are going to see increases in this range. And the ones that come out of this just a little bit better are the ones that are willing to ask the question and not just signing. So here's my actual take. With 1.2 million Canadians facing this decision, yes, this is a huge financial decision. I'm going to offer you that this is also one of those times between buying and selling where you are forced to sit down and look at the actual numbers and ask, does this still fit? Does this still work for the life I'm living, that I'm planning? You know, not the life that you envisioned when you signed the original mortgage. Does the home still suit your needs? I've sat with numerous people, whether it's in Guelph, Milton, the Greater Toronto area, and we've talked about this exact moment where they decided to offload a property because their renewal was coming up. They took stock, they looked around and they said, hey, this actually isn't working for us the way we thought it would. So then they made the next decision, and it just happened to align with the same time that they had that mortgage renewal conversation. You're going to have to run the numbers. There's no way to avoid running the numbers. They are definitely anchors here. So is the part whether you're staying, leaving, trying something new. No, this actually works for us, and you anchor in a little bit deeper in the home that you're in. It's all fine. I'm just going to ask that you look around and take stock, because reacting is not really making a wise decision for you. Slowing down, getting the full picture helps you move with clarity. And I know I say this like a broken record, but your environment shapes exactly who you're becoming. I say that about every home decision because I mean it every time. This one is no different. What home do you want to be building in the next 5 years? That's the real question underneath the rate. Before you sign anything, shop the rate. Have one conversation, okay? Have that 15-minute conversation. Understand the amortization trade-off if you're extending your amortization before you commit to it. And maybe think about a 3-year to a 5-year term. And if you're curious about the health of the overall real estate market, that video is coming up next, and I'll see you there.